Welcome to training. Today, we will explore financial hygiene, expense policies, and audits. Let us get started with the lesson. Financial hygiene isn't just a buzzword for the accounting team. It is the backbone of our company's operational health. When we maintain strict financial hygiene, we protect our cash flow and ensure funds are available for growth and salaries. It also keeps us fully compliant with complex tax laws and external regulations, which keeps the business out of legal trouble. Good hygiene prevents both intentional internal fraud and accidental misuse of company funds. For you, as an employee, following these practices actually streamlines your reimbursement process, meaning you get paid back much faster. Ultimately, it builds a culture of accountability and trust across every department. Think of financial hygiene as a shared responsibility. Every time you swipe a corporate card or submit a receipt, you are actively participating in the financial security of the organization. Let's break down exactly how you can master these policies and keep our financial engine running smoothly. Let's look at the exact life cycle of an out-of-pocket business expense. It always begins with the purchase. You buy a necessary item or service for business use. Immediately after, you must capture the receipt. Do not wait until the end of the month. Snap a photo or save the PDF right away. Next is report submission. You will group your expenses and submit them through our expense management software. Your direct manager then reviews the report. They check if the expense was necessary and within budget. Once approved locally, it moves to the finance team for a compliance audit. They verify the receipts match the claims and adhere to company policy. Finally, if everything checks out, the payout is triggered and the funds are deposited directly into your bank account. Following this exact sequence without skipping steps is what guarantees a fast, frictionless reimbursement. If you are issued a corporate card, you must understand the strict boundaries of its use. Let's compare what is allowed versus what is strictly prohibited. For travel, booking standard flights and standard hotel rooms is perfectly fine. However, booking first-class upgrades or luxury suites without executive approval is prohibited. When it comes to meals, paying for client dinners within the daily per diem limit is allowed. But using the corporate card for your own personal daily lunches when you are not traveling is a violation. For supplies, you can purchase approved software subscriptions and necessary office gear. You cannot buy personal electronics or home office furniture without prior written consent. Finally, let's talk about cash. There are zero allowed uses for cash advances. ATM cash withdrawals using a corporate card are strictly forbidden and will trigger an immediate security alert. Always use the card directly with the vendor. A credit card statement alone is never enough to get reimbursed. You need proper documentation. Let's write out the 4 mandatory elements of a valid receipt. First, it must have itemized details. A slip that just says a total amount will be rejected. Finance needs to see exactly what was purchased, line by line, to ensure no prohibited items were included. Second, the receipt must clearly display the date and time. This proves when the transaction occurred and verifies it happened during a legitimate business activity. Third, we need clear vendor information. The name and address of the merchant must be visible, so we can verify it is a legitimate business entity. Finally, the document must include proof of payment. It needs to show that the balance was paid in full, usually indicated by a zero balance or an authorization code at the bottom. Missing any of these 4 elements will delay your money. Let's pause and test your understanding of our corporate card policies before we move forward. Here is your question. Which of the following is an acceptable use of a corporate credit card? Option A. Withdrawing cash from an ATM for a taxi. Option B. Paying for a client dinner within the allowed daily limits. Option C. Buying a personal laptop for your remote home office. Or option D. Upgrading to a first-class flight for a business trip. Take a few seconds to think about the rules we just covered. The correct answer is B. Paying for a client dinner within the daily limit is perfectly acceptable. Remember, cash withdrawals are strictly forbidden under all circumstances. personal electronics, require special IT procurement processes, and first-class flights violate standard travel policies. Keeping these rules in mind will keep your card active, your record clean, and your manager happy. Now let's discuss audit readiness. Audits are a standard part of financial hygiene. You should assume that audits occur randomly and without warning. Your expenses could be pulled for review at any time. To stay prepared, always keep digital backups of all physical receipts. Ink fades and paper gets lost, so snapping a photo immediately is your best defense. Next, always provide clear business justifications for your expenses. Don't just write lunch. Write lunch with prospective client John Doe regarding Q3 contract. You must also submit your expense reports within 30 days of the transaction. Late submissions create accounting nightmares and may be denied entirely. Finally, if the finance team reaches out with a question about a claim, respond immediately. Delaying your response raises red flags. By following these steps, you ensure that if your file is ever audited, you will pass with flying colors and zero stress. To underscore how seriously the company takes financial hygiene, let's look at common violations and their direct consequences. The most common issue is late submission, such as filing your report 60 days after a trip. The consequence here is often a complete denial of reimbursement. Next is missing receipts. If you have no proof of a $200 dinner, the company cannot legally write it off. So who pays for it? You do. It becomes a personal deduction from your paycheck. Then we have policy bypass, like booking an unapproved luxury hotel. This results in a formal HR warning and non-payment of the difference. Finally, there is fraudulent claiming, such as intentionally altering a receipt amount to pocket the difference. This is theft, and the consequence is immediate termination of employment and potential legal action. Honesty and accuracy are non-negotiable. Let's lock in what we have learned today with a quick recall exercise to ensure you are ready for your next business trip. First question: what is the maximum time allowed to submit an expense report after a purchase? Think about the strict deadline we discussed earlier. It is exactly 30 days. Submitting within this window ensures you actually get paid and keeps our accounting accurate. Next question: what must every valid receipt include besides the date and the vendor information? It must include itemized details and clear proof of payment. A simple credit card swipe summary is never enough for an audit. Final question: are ATM cash withdrawals allowed on a corporate card under any circumstances? No, they are strictly prohibited and will immediately trigger a fraud security alert. Master these simple rules, and your expense reporting will be completely frictionless. Visit Examiverse iStudio to automate your training modules. Thank you for watching. Keep practicing these financial habits to help our team succeed. See you next time.